Hold on, Henry. I just got someone taking a speaker tag. Would you like to add to SMT? Would you like to add to the conversation at all, Michael? I trust me, Henry does not mind you coming up. And I know you would be concerned with interrupting anybody, and you're definitely not.
Yeah,
so, yeah. No, I just want to prep the audience, right? So, he might have maybe not meant to take the tag. We'll see. Michael.
Can you hear me?
Yes, sir.
Give me 1 second, okay?
No problem.
How's this? Can you hear me now?
Yes, sir.
Can you hear me?
Yes, sir. We can. Loud and clear, 5x5.
Hang on. All right, try this now. Can you hear me?
Yes, sir.
All right. If I understood the question or the point he was trying to make, I've been getting it a lot lately. Why am I not spending any time talking about SMT? And is there like a falling out from its utilization? Is there anything that's changed about it? Or why am I just simply not talking about it? Because it's not, it is a confirming element. It's not an essential element. So if you're looking at correlation, or like for instance, if you're a Forex trader or an index trader, it really helps because those markets are closely correlated: pound dollar, euro dollar, vice versa. So by combining and using the influence of whichever is stronger when you're bullish and whichever is weaker when you're bearish, I thought I covered it enough for everyone in the community that's learned it that I could move on and go beyond that. You're welcome to use it. I just don't feel like I have to bring it up all the time because I'm trying to teach deeper and more broader terms and helping with. See, there's no precision in my SMT concept. It's not precise. It is a qualifier. It helps aid in establishing confidence behind the setup that you may be utilizing within the constructs of a correlation model. So it doesn't within the constructs of a correlation model. So it doesn't have its place in everything. There's certainly lots of trades that I can take and a lot of my students can take that SMT may not even form. And I brought it up and I taught it. It doesn't mean that you should just throw it away. Because if you find value in it, then obviously that's what you should hold on to. But demanding that tool or that specific approach to reading or anticipating price action, it's important that the user keeps in mind that it is not an element of precision because it could be diverging several candles and still hold on to that divergence and not move yet. So it's not providing any measure of precision. It's just providing the intel about whether one market is stronger or weaker than the other. And that it has its place and benefit, but I don't feel that me not mentioning it, and I'm taking a great deal of liberty. I hope I'm not speaking too much in terms of.
Bro, come on. Are you kidding me? We all love that you're here and we all love that you're even willing to share what you are with us. So pretty please don't feel that way. And I know you do. That's the only reason why I even jump in, because it is something you're concerned with. And I want you to understand it's nothing. We're all very happy that you're here. Thank you.
But is the person that's posing the question or presenting his inquiry or making a comment, I'm not quite sure.
Yeah, Henry, do you want to jump in? Is there anything about SMT that you have the man right here and he's asking for feedback from you in regards to the conversation? Henry, you brought it up. Would you like to add anything, please?
Yeah, thank you, Mike, for clarifying. And I was like just wondering why you don't like speak about it, So I got it right now. And I was like thinking like between SMT, like between sessions, when SMT happens between sessions, and also when there's like a read news, you also can use like SMT. and also with the 9 theory. So 9 theory is manipulation. So it's gonna happen SMT there.
Henry, what asset are you trading, if you don't mind me asking? Sorry, I don't mean to interrupt.
I trade like Forex and also like NASDAQ and ES.
Hopefully that helps, Michael.
Yeah.
Are you speaking, Michael?
Can you hear me?
Yes, now we can. Yes, sir.
Yeah, I'm not sure. The audio and my hearing you all speak is breaking up on my end. I'm not sure what's going on, but
Twitter's undefeated, unfortunately.
yeah. I think I pretty much said what I hoped I could have communicated, not just to this individual that's on the conversation right now, but hopefully the other listeners can hear my response as well. It's not that I've fallen out of, favor of looking at or utilizing or implementing. I do look at it. I do consider it. But can you imagine if I weighed every possible concept I've ever revealed, in every instance of price action? I would never get to the point of the plot. Like, what are you getting at? Like, you're talking about all this useless stuff, because that SMT divergence is just one facet to an other well-established idea with the majority of other tools. So I know I sound as if I'm trying to minimize it to a degree so much that, well, let's just toss it away because ICT doesn't really, I use it, but I just simply don't rely on it as frequently as some of my students. When they first get introduced to it, they fall in love with it. They're like, wow, I can really see this. But if you use it in and of itself, you'll find that there's divergences when there's no real reason for the market to move. And if you apply SMT divergences when, like, for instance, how I'm teaching you how to look at these gradient levels, what do you think happens when you have a higher swing high when it's bearish? We have a higher swing high on NASDAQ, but at the same time that NASDAQ is hitting that quadrant, ES fails to make a higher high. That in and of itself, it qualifies SMT and supercharges it, because it's giving you a greater deal of appreciation for what should be taking place. And you would think that, okay, NASDAQ went up there and touched its quadrant and made a higher high. So therefore, Six Sister would tell me, let's wait for ES to catch up with NASDAQ, but not when it's bearish. It's actually telling you that now is a very qualified SMT divergence, because NASDAQ was able to make the higher high. It was able to trade to its quadrant while being bearish, and ES is saying, I can't even do it. So selling short in ES is going to be favorable. And or entering as a turtle soup entry on NASDAQ, if you're going to trade NASDAQ when it's bearish for both indices, you use turtle soup for NASDAQ, but then you look for a fair value gap to form once it starts to slide in ES, and then you're in sync with the price action for the Six Sister one.
Wow. That was insightful. Very succinct and insightful. And that's the difference with the Six Sister versus SMT per se. And it's understood. More folks are here, folks. Conversation is here, and a lot of you would like to, or you might have a question, and now is the time to provide feedback. Michael, I don't know if you're comfortable with me taking more questions, but I'm sure folks are interested, and I'd love to hear from them if you don't mind.
If they're going to do it, you don't need to go through the monologue of like,
Right.
thank you. Just send me a text or a tweet, on Twitter or not. You don't need to do it here.
Right. I appreciate that. Well said. We refer to that as Fight Club, ladies and gentlemen. So rules of Fight Club is we don't talk about Fight Club. So save the flowers for writing them and be salient to the topic and respect everyone's time. So Burke Trades. Burke, are you there? You've got a speaker tag. You've been patiently waiting. Would you like to step up, sir?
Yes, sir. How you doing, Kitt?
Very well, sir. And yourself?
I'm good. I just wanted to touch up real quick on what ICT said during the last part of the live. So he said high probability for value gaps lay over quadrants. And I'm looking at Tuesday in the new week opening gap, the upper quadrant of it, there was a BISI created on the upper quadrant laying over it. So that became a high probability fair value gap. And how he said entries occur on time and price, not just price. The entry at 9:51 was during the 9:50 macro, the 9:50 to 10:10 macro.
Ooh, time and
I
price.
found that really insightful. You're catching the low of the day on Tuesday. So yeah, I just wanted to say that.
You made that observation. Fantastic. Did by chance you have a question?
Any question about what was taught today?
Whatever your heart can desire, my friend.
Okay, how could I overcome impulsiveness and stuff of that nature?
Michael?
Well, obviously, everybody has their own demons they're going to wrestle with. And I'm certain if you were in a conversation privately with me, not in front of, hundreds of people listening and whoever else is going to pick up the recording later on, if it was just you and I talking in the room and I said, look, tell me the things that you're afraid of. Tell me the things that you are most doubtful of that are outside of trading. Tell me what has hurt you. Tell me what you hope that you can accomplish. And who are you trying to impress? It could be your parents. It could be the opposite sex, your partner, whatever it is that you're pursuing as a relationship. All those things are external drivers to push us to do things more often, more intensely than we are requiring us to do it. And it forces a perspective of urgency, and it needs to happen right now because you're under emergency. I have to make money now. I have to do this quickly because these external factors. And once the individual that's learning how to trade overcomes those things, first by identifying them, knowing what they are, because they're triggers. They are things that are going to be many times the instigation for you to say, okay, I can't take the pain of uncertainty. I can't take the pain of impatience right now. I'm worrying about this. And if I just don't have a result to share with somebody else that I feel like if I gave them this evidence that I can do this, then they're going to encourage me. And then I'm going to feel better about myself. And that weakened self-esteem or lack of self-esteem will be coddled. It'll be like nurtured a little bit. And then you'll feel like you got something out of that. But what's going to happen is even if the best case scenario that you think is if you were to go out there and impulsively take a trade and you make money and you do something that you feel is right, if you don't do everything right, but you made money, you're going to lie to yourself and say you did. And you're going to run to these external factors and individuals outside the community of trading or your influence in trading. And you're going to tell this individual or whoever it is that this is what you did today. And you want to see their reaction. You want to see them tell you, wow, that was phenomenal. That was crazy. Like, that's nuts. How'd you do that? And that makes you feel more valuable. And if it happens that way, the next thing you're going to do is you're going to hurry up and rush back to the charts, and you're going to want that again. And it's worse than what you get when someone likes your post or likes your comment or, well, for instance, this has nothing to do with ego or anything, but you're having a conversation with me right now, and the people that had already spoke, they're thinking, oh man, yeah, I probably could have had an opportunity to talk to him too. I wish I could because I would ask him this or I would say this. And that's going to make them feel a certain kind of way. And now you have something that a lot of people don't have, and it's going to make you feel a certain way. And then you'll have some kind of motivation on Monday or Tuesday or sometime this week. And whether it's a negative thing or whether it's a positive thing, because it happens on both ends of the spectrum. We can be pushed in by euphoria. You can be pushed in by fear of not feeling like we're good enough. And by having some kind of external stimuli in any means of pushing us to make a decision versus our model doing it, that impulsiveness never leads to success, even if that short-term attempt to do so under the duress of your own emotions that you're placing yourself. The people you're trying to impress, they have no idea that you're feeling those mounting pressures to impress them. Like they have no idea, but in your mind, you think they do. You think that they have some channel to how you think and feel, and it can read you like a book. And that actually indicates that you are a very sensitive person, not in the sense that you're weak and you know, a pushover, but you are very sensitive to things that are like compassion. You're able to tap into things that most humans today can't do because their insensitivity is lacking. But you are attributing your own sensitivity to external people that you want to impress, but they're not aware that you are trying to impress them. But in your mind, this internal dialogue is I need to, because they need to have the thing to be impressed by, because that's what they're waiting for. When they have no idea what you're thinking about, they have no idea that you're hovering over top the buy or sell button. They have no idea how many contracts you're trying to trade, or how many lots if it's Forex. You have no idea what it is you're trying to do, but you can't wait like a cat goes out and finds a bird and brings it home to its owner and leaves it at its on their bed or at the house or whatever, at the porch. And they're showing them, this is what I did. I did this for you. Well, you're trying to do the same thing with your spouse, your best friend, your coworkers, because you want them to be impressed. And it's an external driver that's causing that. And the worst thing that can happen is you get that one time. And no amount of correction, no amount of losing trades, how many times you blow an account, it will never, ever offset that feeling of self-worth that you want these individuals who you care about. And there's nothing wrong about having people that you know and have a relationship with that you care about. But when you place so much emphasis on their opinion of what you're trying to do, because this is not a hobby, it's not a pastime, this is a career and a lifestyle, that you're not, hopefully not trying to do this for a little bit of time and then give it up. It's something that's going to consume the rest of your life. You're going to pursue something like this if you can be successful with it. But we don't make our best decisions when we're allowing our pursuits to be managed by divided mind. That means we're not running a board. There's no board of, you know, this is how many people can give us the opinion on the direction of you incorporated. It's just you. You're the CEO, you're the CFO, you're everything. You're the board. And when you reduce it down to that, you have to make the money make sense to you. You have to make the success stories matter to you. And you can't fudge it. You can't pump it up as something that's it's not. You can't cheerlead yourself in the eyes of the public or people outside of trading and say, yeah, I did this, and not talk about the 10 trades that you lost before you did that one. So it's a matter of how we think. It's about the exchange of relationships outside of trading. Many times that's the driver. And I'm not saying, it's probably not the case for you, but I found that teaching as long as I have and as many students I've acquired over the years, these characteristics seem to repeat over and over again. It's some kind of reason for them to feel above average, and then they can get the praise. And not that that's a bad thing, but many times it's like they want their dad's approval. Like, I really want my dad to look at me and say, wow, son, I didn't expect you to do that. Or a daughter with their mother say, you know what, you're doing something I never would have imagined you could do. And I can't even begin to think about how you're doing it. And you're successful, and I'm proud of you. There's nothing wrong with that. But when you take those people or outside influences, whoever and whatever they are, and you elevate them to a position of now they have control remotely of you, and they're causing you to do things that are not characteristic to your model. They're not characteristic of someone that's taking sound risk and managing it impeccably. You're doing something on a future return on an emotional level. And I think if most individuals try to strip it down to that, they'll discover that it's not that their trading sucks. It's not that their model doesn't work. It's just that they're not calibrated at the right time because they're wanting they want the emotional success of trading more than the money. And they don't even realize that's what they're doing. They want the success, the accolades of peer approval, family support, and like, wow, look, have you seen this person in our family? Cousin so-and-so, sister this, brother that, the father of this guy, he's a trader that does this. He just made this. That's what we want more than making more money. So we've identified trading with a means of measuring our self-worth versus, am I going to make money on this trade or am I going to lose? And if I'm going to lose, how much can I afford to lose and not make it matter so I can take another trade and not worry about it because I'm running a company, I'm not gambling. And when you strip it down to that, then and only then can you start to talk about how you can overcome all the impulsiveness.
Wow, thank you so much, ICT. That really hit home for me. Like, truly. Thank
You're
you
welcome,
so
brother.
much, Kitt and ICT.
Thanks, bro.
Wow. Gerald, you've got your hand up. This is just, guys, for those of you tuning in, I mean, this is really intimate conversation with ICT, and it's a really wonderful thing that Michael has chosen to spend time with us today. So, contextualize the moment, pretty please. Gerald, you're up. What's going on, buddy?
Thank you so much. So I have basically two questions. One, ICT, how much weight do you place on, basing on today's lecture that we had today on the quadrants or those weeks, how much weight do you place on weekly PDRAs versus daily PDRAs when we are looking at these daily weeks? I know we've focused on the 20-day look back, but now just a curious question. And then the other question is, mine is not impulsiveness, mine is tilt. After I take a loss, I go into tilt, and it affected me on Thursday. How can I overcome that? Thank you.
Okay, how much influence do I place on weekly PDRAs? Well, they're there, I mean, obviously, and they don't form as often and as frequently, but I try to teach in a way where the daily chart is high enough that everybody, no matter what style of trading they're using, whether it's scalping, day trading, swing trading, position trading, short-term trading, the daily chart will guide you. If you're going to be a fanatic about it and you have more time to invest in analysis and whatnot, you'll be able to see it in weekly charts, and you'll be able to see it in monthly charts and quarterly charts and yearly charts and multi-year charts. And TradingView gives the opportunity to really fashion your time frame to whatever you want it to be. And you're not limited to whatever time frame somebody else talks about, or even me. So it's not a deficiency on the part of the weekly chart PDRAs that I'm not talking about them because they're not as strong or they're not useful, because they are. I just try to use a nice, obvious, higher time frame daily chart. That's the lowest one I would consider, because I've taught many times the weekly chart. I've talked about the monthly chart when I was teaching top-down analysis. If you want to go back to those time frames, there's certainly nothing wrong with it. In fact, it'll make it better for you because you'll have a much stronger conviction behind it. And I believe what I just spoke about in terms of impulsiveness, anytime anyone goes on tilt, it's impulsiveness. So it's either you're trying to correct a problem right away, which is a loss, or if you missed a trade that you were waiting on and it just took off without you, and you know you shouldn't chase it, but you just can't let it go. You just jump in there and just get a piece of it, and you think to yourself, well, it shouldn't come back here. I won't use a stop loss because that way I won't have to worry about getting stopped out. I'll just endure it and hold on to it. And you end up wrecking yourself. You start doing things that are completely outside the spectrum of the model, the characteristics of a good risk manager, and you do everything wrong, which is the epitome of being impulsive, being reckless. And I don't believe I said anything that can't be applied with the other caller than what this would be for you. Like, everything I said there pretty much is the same thing. Maybe it's not an external, Maybe it's not someone that's externally that you're trying to impress, but you're trying to live up to personal expectations that are way too high for your present skill set. And that's not something that's a permanent thing, but mostly it's the males in trading that when we start learning how to trade and we get a little bit underneath our belt in terms of prowess or ability, and we can become a break-even trader. That means we focus on not blowing the account, but we can find trades that make money. But then we have one or two spin outs where it takes that profit away, and we just stay around that hovering break-even time. And what happens is, as a male, we like to pretend that those losing trades don't happen, and something magical is going to happen, and they're all going to stop, and only the winning trades are going to be there. So you start putting blinders onto yourself psychologically that you are not taking losing trades that eat up all your profitable trades, and you start sweet talking yourself, and you become like this main character in a movie that you're the only star in, and there's no audience yet but just you. So you have an audience of one that you're trying to entertain and motivate because of results, and you're trying to convince yourself. Again, it's not someone external, it's not someone you're trying to impress, but you're trying to live up to some hero mentality that you've placed the weight of that being in you. So it's one of these two things. It's always these things. It's either personal pursuits to outdo what you believe you're capable of before you're able to even do it, which is unreasonable expectations. And that's many times the root core issue with men as traders. We want to be the all-star quarterback. We want to be the Super Bowl ring wearing, MVP. We want to be the main character. We want to be the guy that looks, that this is the person I want to emulate. And that's what you're trying to live up to. Or you're trying to be that person in someone else's eyes. There's no other way about it. That's the way it is. And there's no different way of interpreting it. It's just either doing it internally with yourself or you're doing it externally for someone else. But you're placing the value of what you're doing as a result in the hands of the inexperienced you, that you're lying to yourself, saying that you're better than you really are right now, when you're not, because you're not giving yourself the time, you're not being patient enough to let yourself develop and grow through that break-even point. Staying around break-even is a wonderful platform to eventually become consistently profitable. There's not enough said about that, because if you see, when you first start, you're not going to do anything right. You're going to blow out all the time. And it's very hard to be encouraged by that, because you can't see any rhyme or reason as to why you should continue. Externally, your wife, your spouse, boyfriend, girlfriend, partner, mother, parent, whatever, coworker, they're never going to understand why anybody that isn't seeing proof to continue would even still try to do this. But once you're bitten by this, you can't let go of it. And it's worse for someone that is not pushing or projecting their self-worth to people outside themselves, and they keep it internally. They are the ones I've discovered, and that's what I kind of did that. Initially, I was trying to impress an ex-wife to try to win her back. And to be honest with you, even if she was the one to come back, what she did, I was never going to be able to accept. So it would have been a doomed relationship. So I'm thankful that it didn't happen that way. But it morphed into that. When I finally got past her, it became a me thing. And I was wanting to live up to the aptitude of a much more skilled and experienced trader than I was at the time. I had just recently started figuring things out in the chart and seeing things, and I rushed to start teaching. And I was looking for that outside, oh, wow, this is really good, this is really good. But I couldn't do the things that they were imagining I was able to do in those early years. And I wrestled with that internally. And so I tried to force things. I used to try to train bigger and more frequently, even when I didn't see something I would have expected as a buying opportunity. That's all I was doing then. I forced things because I was like, I can't stand the pain while I'm waiting to follow the model. I got to do something right now. I can't do it. And I would go into tilt too. So I'm not sure if it's like that with you per se, but I believe it's not far from that if it isn't.
Thank you.
You're welcome.
Wow. So Michael, this impulsivity, this way in which we engage with tilt, the way in which we control the impulsivity and the tilt, finding discipline, not chasing dopamine, not just trading to trade, but really focusing on a system and back testing that system and becoming familiar with what that system likes over time. I mean, you've talked so much about pattern recognition, and I don't think there's anything wrong with a community really embracing what pattern recognition and price delivery is, and just the way you've been able to communicate those patterns from, again, we're talking 2016, 2017, and it's 2024. And we're looking at mentorships of previous times and patterns and price delivery that's so unique and similar within these conditions. And I say all that to say, traders who are impulsive, traders that are desperate, traders that are coming to the chart for this external validation, how within this system or process or this business, how, Michael, can a trader overcome their selves, their own weaknesses? How can they overcome this thing that you're pointing out? Like, I have this validation. I have an ex-wife. I am you, what you were saying. I can identify with every single thing you're saying. How can I overcome it? How?
I can only say what I did,
Right.
and hopefully that has some kind of a a value, or at least a starting point that is, use it as a springboard to try and see if that can get you in the right direction. I'm certain it'll help majority of you, help most of you. But for me, I had to focus on things that were predictable, because I was predicting that I would be successful, and my ex-wife would see that and be like, "Wow, I let go of a good guy, all around, and I want to be back with that man." That was not certain, and that's not predictable. It's not high probability. So my mind needed to latch on to something that was highly probable, and it needed to be something that was consistently reliable. So that way, like, think about it, when we're married as men, when we come home, we want our spouse to be happy that we are coming home, and see a smile on their face, run up and embrace you, and hug you and say, "Man, I have been thinking about you all day. I cannot wait to share dinner with you, and let me tell you about my day, and I can't wait to hear what you had done today." That's what we want. That means, number one, you've been missed, you're appreciated, and they want to share time with you, and they want to share their intimate moments from the day, and they can't wait to hear what you went through. That's exactly what men want. We want that. And if women gave that to us, we wouldn't do anything outside the relationship. We would be validated in and of itself. We wouldn't have all these problems as a trader, as a male. We would be content with the relationship. But I didn't have that. So I was trying to compensate with that by making money. So my mind had to be shifted to something that was predictable. And what was predictable was these PD arrays, these data points that were reliable. I could anticipate them. And I moved away from, and I migrated my expectations away from being profitable and making lots of money for the express purposes of impressing other people, being validated through the eyes and lenses of someone outside of myself. I went into the charts and saying, okay, I have to have something that's reliable. And I had built these relationships with these PD arrays where I knew at a specific time, just like a spouse would come home from work, I know I can't wait to see my wife when she comes home. I can't wait to see her. I can't wait to embrace her and kiss her and tell her I love her and miss her. I want to have dinner, and then we're going to spend our time together in the evening time. And it may involve intimacy. It may not. And either way, I'm happy I'm in a relationship with her. And if I have children, I get to see them come home from school, or they may be home waiting for me, and their face lighting up when I walk through. Those are all things that we want to have experiences. They're wonderful. But when you're stripped of that, or you don't have that, or you're pursuing that type of thing, and you don't have the resources, you don't have the relationship established yet, because you aren't established as a man or a woman, and you start looking at the effects of just doing something because you feel like you're not getting anywhere. You're not getting anywhere when you're not in a relationship. You're not doing anything. You're not being successful. You're not living. You're not living a successful life, not in your own eyes and not in the view of anyone outside externally. So you start forcing things to give you stimuli, because like anything else, pain is uncomfortable. And one form of pain masking another is better than just sitting in one state of pain, never doing anything about it, and you choosing to stay in it. And many times, that's that cycle we go into as a trader. We keep repeating the same thing. How many times have you impulsively blew an account? You got in there, you just simply got tired of waiting, or you didn't do the analysis. You didn't do anything. You just sat in front of the charts and you just sat there and stared, and all of a sudden you dwelled on what you're upset about. You're dwelling on a future hopeful, I hope I get the attention of this person, or I hope I get the recognition of this person in my family, or the respect or something. And then that pain, that discomfort, that very thing that causes you to feel emotionally unhinged, when that happens, you feel pain, you feel discomfort. What's the easiest way to get out of that? Distraction. And the best thing to do is give yourself distraction about whether you're going to be making money, because that is a very good pacifier. Pacifying an individual from pain with the pursuit of making money, or in deference to men, pursuit of sex. When we have the opportunity to have intimacy with the opposite sex, or if it's in your personal persuasion, the same sex, whatever it is, if you're pursuing that as a male, that's a strong, strong impulsive thing. And many young men, most of my students that have divulged a lot of these things to me, they tell me all the time that they want to make money real quick and fast because they want to feel wanted by the opposite sex. They want to be wanted. And they view having money and finding success as sexy, attractive.
That is so true to everybody, Michael. I fell a trap to that as well. I mean, preach, brother.
And I was in the same thing. That's exactly what I was doing. Like I lost my wife, and I was thinking to myself, I don't know how to date. Like I didn't. I had one woman. I slept with one woman, and I only wanted to be with one woman. And all my other friends were running around clubbing and stuff, and I just was not. It wasn't me. I couldn't do it. But I had a small period of time when I was doing it. But that was one of my worst times as a trader, because I was doing everything I could to project externally that I had it all figured out, and I was hip. I was the one. And back then, the 20-year-old me, I wasn't the one, and I was doing everything wrong. But on the outside, I was projecting as if I had it all figured out, because I needed someone, and it doesn't matter who it was at that time. Someone needed to tell me that they believed in me. They had faith in what I was doing was of value, because I was at my lowest point. And you'll do anything and everything to get out of that state of mind. And for me, it was taking big risk. I wasn't afraid of losing money. I felt it for. In fact, it became a normal function. Losing lots of money became something I was accustomed to. It's much like a very sad event where a woman stays in a relationship where she's being battered by the person she's with, abusive relationships. And they make up all these excuses that, if I leave, that means I quit the relationship. If I stay here long enough and show them that I care, they will turn it around. Well, that's what we do with our trading. We do the same thing. We abuse ourselves, beating ourselves up, causing us to lose money, and we keep saying, I'm not going to divorce this idea of doing it wrong. Because if I keep doing it, eventually it will submit to me and I will conquer it. But it doesn't work that way. And we keep this toxic mindset, this looping cycle over and over and over again. And you need someone outside of you that's done it the right way and found their escape from all that stuff. And that's what I try to tell you when I give you these long-winded stories, because for some of you, you probably haven't even been trading long enough to encounter that problem yet. You just started. You don't even know what it feels like to be at the mercy of your own emotions, trapped in this mental prison that you're creating for yourself, that the door is unlocked. All you got to do is step out of it. But you hold that door closed, or you're staring at it open, but you're saying, I don't deserve to walk out of here. I need to fix it this way. And when you're doing it all wrong. And it's a very complex thing, but you have to obviously strip away all these reasons that are outside yourself and focus on data. You need to focus on what it is you're pursuing, and then keep your focus on whether or not these things are reliable. Are they prompting you at the times they're supposed to? I'm talking specifically about PD arrays. Like today, what I shared today, that type of thing, it's predictable. And I found passion, I found reward, I found, I guess, accomplishment really by seeing my expectations being met with the reality in the market that is supposed to be random, that nobody knows how to predict and time the market. But now I'm sitting here in Middle River, Maryland, in an area where you're collectively white trash, and I'm walking around people. They have no idea I can do this, and it completely changed and stripped the way I see things. And that's what I want the listeners that were watching that today. I want them to feel that. That's not arrogance. That's not ego. That's not you, you know,
No,
acting
Michael.
better.
Michael, one thing I want to add, and I want to just coming to the chart as your best self. And that's
Yes.
something that as we're walking through and peeling back the emotions and really trying to deal with these external factors, how we are overcoming these things to come to the chart as our best version of ourself. And for some folks who are newer, they might not have the same emotional layers and the context that we bring to it, and the story that we bring to it. And I too can very much relate. And I know there will be older traders that too can very much identify. And then there's going to be younger folks that, I mean, it's just that they won't have that, but it's how can they become their best selves, right? Like, not these impulses that you're talking about, the choices that these people make. I mean, the woman that a young man lusts after over time, and they're trying to be a good trader, is that in their best interest? In the same way that they lust after these impulses externally, are they doing the same thing and trying to validate themselves through the chart internally, or through the market? So just wanted to pontificate, or get your thoughts and 2 cents as the younger traders, and how they can come to the chart as their best selves.
That admittedly, they're the hardest of my audience to reach because you know how it is when you were young too. We don't listen. Look, we're not going to listen to good advice because we think that you ain't me, bro. Okay, so nobody's going to know it better than we do when we're young men. Um, my only advice that I can give is you're going to try it your way. You're going to think that you're going to be the exception to the rule, and you're going to find out very painfully, humbling, that you can't cross the humble river. Okay, and you can't get on the other side the way you're trying to do it. And if you simply give yourself more time and flexibility, and don't build up this future image of yourself, you need to build up the strong inward man or woman, and keeping the focus on you being principally oriented. You have to be rule based, and that's the only way you can manage yourself without emotion. And if you focus on things should start with this time, this price, this is what I'm only trading. I'm not going to chase another market. I don't care about gold. Everything's gold, 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 gold. Before gold, everybody was Bitcoin, Bitcoin, Bitcoin. There's always a big market move. And the traders that impulsively this herd mentality run over there, they're the most inexperienced. And that is showcasing a central tenet to people that are, number one, not mature as a speculator. The people that were running in the pits, the floor traders in the pits when they had open outcry, they was always watching big commodity market runs, soybeans going limit up, oats, cattle, whatever. They didn't turn to each other and say, you know what, guys, we got to get out of this S&P market, okay, and we got to go over here and start doing that. They didn't do that. They didn't do that. Why? Because they know themselves. They know their market. They know their model. Why are they going to chase something else? It's just like I gave you with the analogy with a man with a good woman, or a woman with a good man, or a good partner, whatever it is that they're for you and you're for them. Monogamous. You need to be monogamous with your model. You need to be monogamous with your expectations as the trader in development. You can't force future success faster than it's going to come. And knowing as a young man, it's harder for someone that has nothing to lose to be disciplined. You're going to be reckless. You're going to go out there and take huge risks. You're going to pour all your money, it's like girl money. You work all week long just to blow it on a Friday night, trying to get somebody to come home and hop into bed with you. You're doing the same thing in the marketplace. You're going to throw all your money that you saved up to put in that account or spent on these funded accounts, and you're going to blow it all in one attempt just to make lottery wins. And that's your girl money trade. That's what that is. So there's really no difference. We're back to the same thing, but I don't have an answer for the young men that's beyond that, because I know what I just said wasn't going to work on me. It wasn't going to work on me because of my youth. And you have to let the youthful men hit the bottom. They have to feel pain. They got to do it wrong. And then eventually say, you know what? I'm going to be a man. I'm going to own it. This is my fault. I can't blame anybody else. I'm doing it wrong. I need to see somebody explain this in a way where it makes sense to me. And I have a rule-based idea imposed upon me, and I got to exercise discipline doing that. There's no other escaping it. That's it. They either hit rock bottom and stop, or they come in, which is rare. They come into this business very mature, very grounded, and they're going in with discipline right away. And it's very hard to find. Very,
One
very
thing,
hard to find.
one thing you're mentioning, Michael, is I find the difference in the evolution of who we're talking about here in these young men, folks pre-fatherhood, versus folks who become fathers and become providers. And when we talk about the repercussion and or how a man in their own evolution, when we do look for the market to provide, as you've talked about in your Edge series and in so many other content that you've created, finding ways to have the market actually provide, and the trader becoming a father, becoming a husband, reaching some of these milestones as they do transition from being a younger, more reckless man into someone that they got a baby now, and they got a little bit more responsibility, and they do need to provide, and where and how trading can be more. And because of that provision or that necessity within themselves, that they do incur more risk management, and they have more discipline to their approach. And typically they find success, right? Like, so the evolution of trader that we talk to, our audience, your audience, Michael, our community, there are so many different folks that we're really talking to. And I think, how do we and talk to the audience of the young men who are, struggling fathers that are trying to pay additional bills. And I will reiterate, just with flowers to you, and say, reiterate, pay attention to the right now content, right? Because the sense of urgency is there. You are providing a very, very clear conduit of understanding for folks to pour themselves over, to then apply that discipline, to be their best selves. Because coming to the chart with fear and anxiety, or greed, or the same way that we're referencing lust, and these lower vibrational things about who we are, right, in the world that we live in, and coming together as traders and talking about being providers, that's like the flip side, right? Being a father, there's so much high vibration and positive vibes, and I want to continue the conversation, or pretty please, these fathers, that these young men who are fathers versus the young reckless man still learning, that has to hit rock bottom. Would you mind, what insight or advice would you give them?
What advice for which group? I thought I was just talking about the younger group. Are we
Well,
asking
yeah, no,
about
well, I
the
mean,
fathers?
we were talking about like the younger group, and I was thinking of seeing if we could transition, because there are some folks in our audience that are, they are recently married, they are committing, they are in these committed monogamous relationships, but they're still, they're transitioning, right? Point is your audience is so diverse, and when we refer to any archetype or character, that there's this broad community that we have. So you're really
Mhm.
talking to, a lot of different folks. So I was just thinking of it in that regard. That's all.
Well, I'll contribute this. I have seen statistically the majority of my successful students that go on to be consistently profitable, they make real money, they became millionaires, are the ones that have either a monogamous relationship that they're grounded in, and they would never jeopardize that with their trading. They would never jeopardize um, their personal finances or family finances with this. So they treat it very maturely, They're sober-minded with their risk. They manage risk because of that, and they have something to lose. And when you're young, we don't have anything to lose. We're this reckless, young, wild, and fancy and free. And my best successful students are all family people. They either have a spouse or they have a long-term relationship that hasn't moved into a relationship that's married yet, but they're basically married in their eyes, and or they have children. And when you become one of those two, if not both, a parent or a spouse or a long-term relationship that's committed, there's a paradigm shift. You're not going to be so apt to go out and just blow it out. And that doesn't mean that you can't become that. But I have seen that when someone is shown a structure or an approach to go into saying, okay, first discover who you are. What are your triggers? What makes you tick? What gets you excited? What makes you mad? What gives you fear? What causes you to feel overzealous or overconfident? You need to discover those things early on, regardless if you're a young man, young woman, old person, middle age, family or not. That's the first thing we have to do all the time because that's what makes you tick. And if you're ticking, you're a bomb waiting to go off. And if you don't know how to defuse before you self-destruct, you will go on tilt. And you can have a model that works really, really well and still just simply not do it right and blow up. I have seen that the folks that have learned how to trade well, they have a family mindset. They're not doing this to get the coolest, flashy sports car right now so they can go on the social media. They're doing it because they want to build future wealth. They want to be able to provide a better lifestyle for not only for themselves but their family, and they want to bring continuity to their life that way. And they're not interested in sharing how much money they're making with everybody else. So they're introverted financially, and to me, that's like a superpower because today everybody wants to show what's in their wallet. Everybody wants to show what they just spent their money on a stupid purchase. And the successful students I have, while they may have all those things in the pursuit of what they're doing in trading, and they can afford those things, they're not trying to live their life in the limelight, pushing that out on everybody else because they've grown past this in their life where they're no longer looking for outside or external validation. They're looking for the continued success that they're in their relationship and family, and whether it be with their spouse or whether it be as a single parent, they have something to lose and they don't want to be reckless about it. So they take trading or diving into trading with a little bit more sober mindset, and their shortened learning curve is a testimony to that.
Wow, that was perfect. Thank you for coming for taking it from that angle. Got more folks here. 637. I like the prime. We are the boss. NQ Trader was in my in DMs. Would like to speak or has a specific question. The boss, are you there, buddy? The boss, the NQ Trader. Come on, step on in. Profitable losers here. What's going on, buddy?
What's going on? You can hear me?
Yes, sir.
Awesome, man. Great conversation, great space. Just gonna just ramble on quickly, especially go into what we just spoke about, like prior to this, about what my takeaways were on the call. I don't really dive too much into all the verbiage, but my biggest takeaway for me was, that emphasis on the bigger time frame, right? I always like to think of that bigger time frame as the boss, right? Since I trade the 1 minute, the 1 minute workers got to follow with the boss, where it wants to go. And it's you'll always hear people say, price is fractal. So of course, when you see him on that bigger time frame highlighting certain areas, then when you drop down to that 1 minute, he said something, what should be taking place, right? So then it's like, now this is where your plan is active. I always talk about like sports, this is like in the gym when you're back testing, but game time is on prime time. It's on certain times. So around those certain times that he's laid out for us, look for, right, what should be taking place. And then me personally, as far as, I was once, a new trader, and my little special ability was I took what everybody's horror story was, as far as, their losses and everything, as lessons, right? Without me having to put my hand on the stove. But granted, that part right there is what can't be written in books or told in courses. Is that, he's telling us till he's blue in the face, this is what you have to do, this, that, and the third. But for some reason, we still put our hand on the stove, right? And we get burnt. But the difference, what separates a lot of us with the others, is that we're not there pointing a finger like, oh, it's the market, it's his teaching. It's no. Accountability is what leads to profitability,
Very,
right?
very well said, brother. Very well said. We got a bunch of folks here at 640. And we got the man ICT here. So I'd like to bring the conversation back around to the man himself while he's here. So appreciate you, profitable loser. The boss is here. You got a question, boss? And I appreciate you, brother. We're just recalibrating the conversation here a little bit. So back to the honored guest here. So the boss, are you there, buddy?
Yeah, I'm here. Thanks.
Go ahead. Did you have a question?
Yeah, I do.
Okay, jump in, buddy.
Hi, everybody. I have a question. I was in trading 8 years. I was trading before futures right now, four markets, and that was commodities, crypto, forex, and also a bunch of multiple markets. Now I am trading futures. So my question is, every day ICT is posting a video every year. So now he was talking about like how to use like Wix. I think so. So
Yeah, bro.
yeah. So my question is, right now we have multiple concepts or multiple entry charts. Now just give me one working like entry model.
No,
I
wait.
promise. Okay.
What are you saying?
Like I said, I we have a multiple different like concepts, entry models, and also he was talking about ICT like advanced concepts today,
Yes.
like quadrants, like in the AVG is high probable, right?
Yes, sir.
Yeah, that's my question. Like,
I,
yeah,
I don't
there's some
understand. I
gaps
don't
outside.
understand your question.
I believe I understand what
Sure.
he's saying.
Okay, Michael, do you understand his question? I guess that's the first point.
Can I tell you what I think I understand as his question? He can tell me if it's true or not.
Please.
Okay. I believe he's asking, can I show him a model using these quadrants where they can just go in there and right away and just, this is what I'm looking for as a buy setup. This is what I'm looking for as a sell setup using these quadrants. Is that what you're asking?
Yes, that's correct.
Bro, I just want him out. That's kind of funny how he's asking it, but I mean, there's a language thing, and I mean, it's kind of funny, Michael. I don't know. I find it funny.
It is. Well, here's what you can do. You can go and look at the silver bullet, and you're going to be pleasantly surprised at the silver bullet fair value gap that forms in the hour 10 o'clock to 11 o'clock Eastern time. Those fair value gaps are going to lay right over top of a quadrant. So I've already taught the models. I just taught how to know that the models that you're trying to implement, the PD array is going to work in that model because of what I taught today. So it's a universal application. That's what makes all of my models work. Every single one of my models are integrating what I taught today. That's the thing I've been holding back. That's the thing I said that people aren't going to see it. It needs to be shown to them. It needs to be shown. You don't ever see anybody talking about this in a chart. It's not something that people go into the chart and say, look at this, look at this, look at this, because it's completely isolated and alien to everything else that's out there. And that's why it's perfect. They hit it in perfect plain sight. In short, what I'm saying is every model I ever taught, every model, whether it's a breaker, whether it's a unicorn, whether it's the silver bullet, whether it's optimal trade entry, you're going to find that optimal trade entry, 79% retracement level, 62% retracement level, and 70.5 many times is laying right on top of a quadrant. The key is you need to work in whatever price is doing right now. You work from the lower time frame out to the daily, or daily go down to the lower time frame. But if you don't know how to navigate and work, like I've been showing, I'm showcasing what I do and why I pick very specific PD arrays to say this is the wick I'm looking at. Why am I using that wick? It's the longest one, it's the most protracted one, and it's reaching in towards that range of that wick. So therefore, that's the most important one right now. So if it's going to go higher, I don't care about that. I need to know these quadrants it's getting ready to trade up into, and is it going to use those levels? And if it does, and it happens to happen in 10 o'clock in the morning to 11 o'clock in the morning, and you're bullish and you're expecting your model to be silver bullet, and you buy the first presented fair value gap in 10 o'clock to 11 o'clock, and it lays on a quadrant, you have a loaded deal.
Yeah. Wow. Mic drop. The boss. He gave it to you the same way you gave it to him. Okay. Yeah. Give me a model. I want a model. Give me something that works. And he goes, excuse me, sir. Mic drop for you right there. Okay, the boss. You okay there, buddy? Okay. Just saying.
Yeah, it's okay. It's okay. Thanks for that. I
It's
appreciate
okay.
it.
It's okay. I love it. Good job, buddy. It's fun. It's fun. Benjamin, you got your hand up, buddy. Jump in here.
Hey, hello, Kitt. Hello, ICT. Happy Sunday. God bless.
God bless,
I have
brother.
a very quick question. How essential is it for a trader to factor in profiles before looking for their entry model? And what I mean a little bit by that is power of three or Judas swing at 930. If you're looking for a turtle soup, taking at the Judas swing at 930, or if you're taking a unicorn setup at the end of the manipulation phase of power of three, or IO fed during the distribution phase, but under 50% of the range. Like, how important is it to factor in profiles? Is it like essential, or can you go around it?
Are you asking about my profiles that I've taught in terms of like consolidation day, a classic buy day, classic sell day, seek and destroy, that type of thing?
Yeah, and making specific entry models tailored to different type of profiles.
If you watch, if you watch the presentation I taught that with, I said that you're not going to know all of those profiles like the back of your hand for a long time. You'll be trading a long time before you are versed in saying, okay, I expect this day to present itself as a consolidation expansion in the PM session. You won't have the experience to be able to do that. But the easiest ones to determine, and this is how, if I can remember correctly, I present it this way. You want to focus on the classic buy day when you're bullish. You know, what you're looking for some protraction. After the opening, it's going to trade down. It's going to trade down now, like I taught today. It's going to hit a quadrant level, and a PD array is going to lay right over top of that at the right time, at a macro time or a session opening. The first 30 minutes after midnight, it's the first 30 minutes after 9:30 opening, the opening range in equities. If you're trading Forex and you're going to be trading the session open at New York Open between 7 o'clock and 10 o'clock, it's 7 o'clock to 7:30. That first 30 minutes there, everything you're looking for is going to occur in that first 30 minutes. So having that, or if you're looking at the PM session, you know, you're looking at 1:30 to 2 o'clock, and that sets the tone for the PM session in New York. If you're using profiles or you're trying to establish a means of implementing them all the time, I can tell you it's going to be frustrating for you if you're not that experienced. But if you're simply focusing on when you're bullish, looking for the classic buy day, or if you're bearish, you're looking for the classic sell day. You're looking for that Judas swing up, then fade it and sell off. Don't demand that it has to happen only on the daily range. If you're focusing your time on, for instance, let's go back to 7 o'clock to 10 o'clock in the morning, the pre-session time or the New York Open kill zone, the overlap. So if you're bullish, wouldn't you expect a classic buy day profile to form within that small window of time. It need not create that same formation on the daily chart because price is fractal. So if you're bullish, you can look for some kind of a protraction lower, take some sell side out, hit a quadrant level, rally away, give you some kind of a PDA rate that is confirmed with what I just taught today. And you can chase the full range of that session, not the day, but the session, and then exit on some kind of another opposing PD array that lays with another opposing quadrant. So that way you're going to fill the numbers for that session, and you'll have a classic buy model profile just being applied in that small little segment of price action. And by doing that, you'll start getting more experience with anticipating that, and eventually it will flesh out to the daily ranges. And over time, you'll see that, oh, when I'm in these larger daily or 4-hour or 1-hour price runs, and we've already moved into an established price run, but we haven't reached a target yet, and I'm in the middle of the move, then I start seeing these consolidation days or consolidation profiles. And then I'll see a day it starts off at consolidation and everybody loses interest. And all of a sudden, after the lunch period begins, they go down, they do that macro where it runs to the liquidity at 10 o'clock that high or low is formed. And let me say it correct. When you're bullish, it's going to be a low that was formed after 10 o'clock. And they're going to run for that sell side. And then they protract higher bullish, so that's your consolidation to expansion. So there's no shortcut to, I believe, what you're asking for. But I believe by starting with the simple ones, the classic buy model, the classic sell model, and applying that to just the session, like whether it's morning session or London session or Asian session, that's going to help you at least establish some kind of a baseline of experience. And then the other ones will come. The one you're going to have the most difficulty with is the seek and destroy.
Yeah, wow, that was a lot of insight all at once. But for my first, and I'll keep this short so someone else can speak as well. But for my first few payouts, I was using the classic buy and sell day profiles. But then after that, I switched over to identifying the power of three stages coupled with time. So I found that usually 9:30 can create the manipulation. And I look at the 4-hour candle. I use the open, high, low, close, and that brought me to around like $280,000 in payouts. And I found that leaning back to my past question, I think, is it worth a trader who's already profitable but semi-profitable to focus on trading different profiles, go a little bit deeper to scale their trading, or just rinse and repeat the same buy session and or buy profile and sell profile?
Well, look at it from a corporate stance. Okay, imagine that you are Nike shoes. Nike comes out with Air Jordans decades ago. Okay, and or whatever, they come out with some kind of new shoe. Did they stop making all the other shoes? No, of course not. They tapped into different markets by approaching them with different cross trainer shoes, not just basketball shoes. And then they had other things. And you as a corporation, you incorporated, you have to have a core model, your core structured approach to what you're going to do as a businessman in trading. You always do this. You never deviate. This is your breadwinner. This is the flagship of your corporation. If it's your classic buy model, classic sell model, and that's what you make your bread and butter on, that doesn't change. But you can explore with the least amount of capital pursuing other things, not with the expectation to overcome or unseat or usurp the command that you have with the model you use as a classic buy, a classic sell. It's just you're looking for something to diversify, not to overshadow it, not to replace it because you think it's inferior, because there's nothing better than a classic buy day and a classic sell day. That's the purest, that's the best of the best. You're getting the lion's portion of the range. There's no other model or profile that's better than that one. And in fact, if you look at the unicorn in a market maker sell model with redistribution, second stage redistribution, that in and of itself is a classic sell day or sell profile. It's the classic run up, Judas, and it tanks and sells off to the original consolidation sell side liquidity pool. Vice versa, when you look at a market maker buy model, the second stage reaccumulation, unicorn, is a classic buy profile. It jumps down, creates that little Judas swing, and it's going to go to a quadrant, and then boom, it's going to rally up and run the original consolidation buy side out. So there's nothing better. If that's what you've made money on, I'm telling you that there's nothing better than that one. So stick with that one. But if you just want to, out of morbid curiosity, and you just want to, expand your versatility as a trader, exploring the other profiles, sure, have at it.
Do you mind what I heard, Michael? This young man's advanced trading and utilizing profiles, a word that I don't think is often used, but is something that you've taught, and that would be sequencing. Right, actually sequencing, and I mean, my favorite model is the London intraday protraction. Right, so when we think of AMD, when we can clearly identify an accumulation and then clearly identify a manipulation, then that sequence of looking for a distribution and looking for distribution trades is really a thing, and it's something that you've taught through your concepts. So I'm not sure if he was asking it like this, but as he was mentioning profiles, he didn't utilize the word sequence, but I kind of heard, just in my own interpretation, of kind of what he was asking with these profiles, if there were ways in which he could sequence. And I thought your answer was great. I just wanted to add that point. It's not that you had to allude or add more to it, but just the idea of sequencing through these profiles. Like when I think of sequencing, and you're saying, like, I think of up models, I think of down models, and I think of range models. And there's the seek and destroy model, and then there's the range model that will give you like your inside day versus your outside day, right? Like we get the range expansion versus the range contraction. So I mean, up, down, or range, and as you're saying, like maybe just even identifying a range of not trading it and staying focused on either the buy or sell model is the bread and butter winner that's probably going to pay the trader the most, right?
I believe so. Yeah.
Spot on.
I think also if you take what I was just saying, um, every model I taught is really taking your present perception of what price is showing you right now in price action. Let's go through a few of them real quick. You have optimal trade entry. Say you're bearish and you're looking for a sell. Aren't you establishing a classic sell profile when it goes up into optimal trade entry and then sells off? Isn't that same model? Strip it down to its essential core. Isn't that exactly what that is? Just like a puzzle piece, if you strip it down to what it's doing, it's going up into optimal trade entry, OTE. That's exactly what model 2022 is. It's a classic sell day profile just being applied intraday. It goes up, Judas swing, sells off. The same thing's happening when you're bearish and you're looking at a silver bullet and the fair value gap forms. You're going to do what? You're going to wait for price to trade up into the fair value gap. That's your protraction. That's the Judas swing of a classic sell day profile just being applied intraday. You're taking that fractal concept of price action and you're saying, okay, I don't need to do it on a daily range. I'm going to look at price action because I know it's going to go up to go down and reverse it when you're bullish. When you're looking for a turtle soup, okay, you're seeing what? The market's going lower because the low it went down the first time didn't go to what I taught you today, the quadrant. So it falls short of that. So you know it's unfinished business. Then it tanks again, goes down to the quadrant, and it blows out the sell side that it engineered. Isn't that a classic buy model profile being applied once that sell side's rated? Then it's going to rally up. That's exactly what that is, isn't it?
That was both of you guys spot on. I really appreciate it. And last thing before I go, I just want to say thank you, ICT, for everything. Since I started studying concepts, I would say in 2021, I've lost over 120 pounds, converted my life from being Jewish to actually Christianity, getting baptized last year in February. My mom hasn't had a job in 3 years. My dad left me, and now I'm paying rent because of the money I'm making in the market. So I just want to say I really appreciate it. And I know as someone else who might have a similar perspective of trying to like reward ourselves and be like say, feeling accomplished. It's hard to feel that way, but I just want to say that you changed lives out here, ICT, and I really appreciate it. You definitely changed mine. So
praise God.
Praise Jesus. Yes, sir.
Wow. Love it. Real life feedback from the community. I think Michael values and appreciates your voice. So coming up here and folks providing value, asking good questions, and really picking his brain. Just as a host, I get to at least kind of be that conduit there. And I think this is a fantastic conversation. Thank you, Michael, again for your time. 6:59. I like the time. Got a couple more traders here. Karma trades and stop loss. If you don't mind, Michael, maybe a couple more. Doing okay? How you feeling?
Can we do 4 and limit it there?
Yes, sir. Yes, sir. Absolutely. For sure. And guys, if you're here, pretty please give this space a share. And just if you value and appreciate what we are doing here, just try and let people know. We do this with our time, with our energy, with a lot of love, and and out of respect for what it is. If you wouldn't mind, pretty please share the space. As some of our folks have said, don't be a hoe, share the show. So thank you very much for doing that in advance. Karma Trader, my friend, hermano, are you there? I know you're going to be excited with the question.
Hey, kid, how are you
I'm
today?
doing excellent, mi hermano. How are you?
I'm doing great. Give me a moment. I'm getting out of a car.
Okay, no
And
problem.
I,
No
I'm
problem.
just
Take your
checking.
time. Come back.
Just a
We'll go
second.
to,
I'll be back.
okay, we'll give Karma a second. Karma's a regular. I know he's excited to be here too. Stop loss cannibal, IPTA enthusiast. House all.
Hello.
What's going on? We're coming back to Karma, but stop loss enthusiast, how you doing, buddy?
Stop loss enthusiast. I'm doing good. Hi, Kit. Hi, Michael. I just had a quick question. So I'm huge on quadrants, and I really like the recent
Oh, you
videos
are,
and
huh?
lectures.
I wonder why.
I, I, yeah. I'm very much a time-based gap trader, so RTH gaps, new week opening gaps, and I was wondering, what would you suggest as an alternative for the daily chart for someone that wants to be a strict RTH data-based trader, given the fact that RTH doesn't have a daily chart, kind of similar to what you taught recently, if that makes sense.
I don't understand how you framed the question. Could you try it again?
Yeah, I'm not sure either.
Okay, so let's say I wanted to only use the RTA chart without data at all from the daily chart because regular trading hours doesn't have a daily chart because it's only 7 hours. What levels would you look for, or what time frame would you derive those wicks or high time frame PD arrays from relative to the RTH session only?
And you're forcing me to not observe anything on a daily chart. Is that what you're asking? But
Well, yeah, it's weird.
Essentially, yes.
The interest. What you? Let's. Okay, ICT. You got to close your eyes with one hand tied behind your back. You got to read the market now based on these
yeah,
fictitious.
the amazing Preston.
Yeah, like, bro, come on now. Like, we already know he's the man, but you really want him to walk on water in front of you? That's it, right? Like no, ICT. No, do me a favor. You got to close your eyes and you got to tell me where price is going to go, but you can't look at a daily. Okay? Oh God,
Okay,
I love you guys. You pretty please, Michael. Any way you want to jump in, bro.
all right. Well, okay, let's strip it down to this. Say you sit down and you know that we have regular trading hours, previous day settlement, 4:14 p.m. Eastern time, and we're called to open significantly higher. So we have a premium open. So we know if it's really elongated and it's a large gap, in and of itself, right away you got 70% likelihood that it's going to go to consequent encroachment of that gap by 10 o'clock. That in and of itself is a model. So you don't even need to look at a daily chart for that. You could derive from an hourly chart the wicks and imbalances and anything that would lead to what I taught today in close proximity wherever market price is at the time of the opening. So in the first 30 minutes, you would implement 1 hour wicks or inefficiencies and grade them and transpose that over top of your 1 minute chart and then look for that 70% likelihood of filling the gap at least halfway, consequent encroachment by 10 o'clock. That's one way. If you were going to give me that cat to skin, that's how I would apply it.
Love that. Thank you.
You ask the man, you limit his ability to answer the question, and he still crushes it. So That's so funny. I love it. Karma, are you back, brother? Are you out of your car and can you engage? Stop loss enthusiast. I know your name is not stop loss enthusiast and I'm mixing it, but I love the it's stop loss cannibal, but stop loss enthusiast.
I like your version.
It's not really a good name, but we're enthused. Not. I'm more of a TP enthusiast. um, Karma Trades, are you there, buddy?
I'm here. Can you hear me well or
Yes,
too much
sir.
noise?
Yes, sir. Jump on in however you'd like, buddy.
Hi, I just want to say that I'm really happy to be in here. I got like away from social media like I think 8 months or something like that because just what ICT was mentioning at the beginning, we tend to maybe compare ourselves to anyone or to whoever is in social media making good or maybe faking about it, and that was making me going through a really bad time. And I was in a moment in my life where I was just like passing evaluations, funded accounts, and not being able in making withdrawals or payouts. And it went like a whole year when I was like, where I was like passing like 10 accounts in a week and not making a single payout out of them. But I think it was already 2 months ago where I started making payouts. I already have 1 month and a half with only one day of losses, and that was because I started to focusing on
Con-
being with
Congratulations,
only one.
buddy. I love hearing that for
Thank
you.
you so much. Thank you so much. I've done like those 4 payouts. I'm going for the next one this week. And everything that was happening in my life at that moment was that I got away from God. And just like the guy who left, who said he converted, I converted to Islam. Now I'm Muslim. I got closer to God. I was like losing my time chasing things I shouldn't chase at the moment. And I delayed the reward that Allah and God has to all of us if we only focus in what really matters. So I just wanted to mention that because I think any one of you is maybe going through the same phase, even if you're already making money. God is going to put you in a state where you're going to make 20, 50, 100K more if you only focus a little bit more in the things that really matter. So just focus on that. Doesn't matter if you're making money. Don't think God is not the creator and God is not the one making that happening. Okay. And for me, it's a pleasure to be here. I literally, I'm shaking here because I dream about this, about ICT listening to me at someday. So I'm really happy that that's happening.
Did you have
Even
a
if I'm
question, buddy? Though, just out of
Yes,
curiosity.
I have a question. Yes, I just wanted to mention that. But
That's
my
great.
question is, I focus on the market makers model. I really, it changed my life, the market makers models. And I want to ask you, I think I have some issues now with my trading, with my research, and it's like the entries. I know that you already mentioned some things about it, but if you had only if you could only focus in one time frame to a spot when the market is making the change of the state of delivery to continue in the sell model or the buy model, which time frame would that be? 5 minutes, 50 minutes? I focus mainly on the 50 minutes to spot the entries, but sometimes I just fucked up and get into the trades too early, which put me in a really bad position, and I barely make the profit for the day, and sometimes I just make enough to be even. But I know my issue is not knowing where the market is going because the market makers is very clear. But what is killing me is the entry. So if you could only focus in one time frame to spot the best moment when the market is doing the shift for the target, like depending on the model, on the buy model or sell model, what time frame would that be?
I believe what you're asking for is answered in today's presentation because
Yep.
it literally gives you the cipher, it's the missing cog piece that makes all these P arrays just completely fall right in the right place. And it doesn't matter what time frame, because if you're a market maker model trader, and let's say that you see that model, that profile of price action going up and getting ready to go down to sell off to sell side near underneath the original consolidation. If you see that on an hourly chart, you can take it on the hourly entry when it trades up to the quadrant, and it gives you the fair value gap or the bearish breaker or whatever PDA rate you side with, whatever one it is, and it forms in that chart. But if you don't at least know the fair value gap, you're kind of like giving yourself a built-in handicap, because the fair value gap is many times the one that usually appears. It's usually there. Breakers maybe not so much, but the imbalance in price action when it lays over top of a quadrant in the time frame that you see the market maker sell model or market maker buy model, when it goes to that quadrant at the right time, macro time, opening session 30 minutes, when that overlaps with the PD array, that answers the whole problem of your entries. And then the new issue is going to be, where are you going to place your stop loss?
Okay, well, I have one question added to that. I mainly focus on the 15-minute chart, and what happens when I see what you're saying and somehow they overlap within a fair value gap and also with liquidity below it, below the fair value gap. We all know, and in your concepts, you teach that whenever that happens, it's really common that we continue going lower or higher because there is a fair value gap and liquidity below or or higher. But what happens when it hits the fair value gap, but it immediately reverses, but also it matches with the sell side or buy side model? Eh, How do I spot these things, or is that something that I can like tell from the market to happen? For instance, the drop that happened on Friday, if you check, it is inside some fair value gaps, but it reverses all the way up. And I think for me, the market is going to continue going lower. But how do I know we're going to be reversing that hard, or we're not going to continue in the same side, even when the model is saying that?
And
Yeah,
while you're at it, like I said, pretty please walk on water, Michael, with this response. It's
yeah,
kind of tough.
I don't know how
Kind of
to.
tough.
I don't know how to answer that one because I don't know
Yeah,
really where he's trying to go to. I
yeah.
mean,
It's like a one. I get what I mean. I really don't know what the question is. I really don't, Karma. Um, it's like you're trying to apply something very specific to like a specific condition or a market condition that, I mean, ICT, in the way that you're utilizing his concepts algorithmically, you know,
Yes.
are going to apply to more than just one unique concept or market condition. And you're doing a very good job of outlining and describing a specific phase or market condition towards your question, but I'm not sure anyone really knows how to answer it.
can you structure the question in a way where outline what you think an opportunity is on the 15-minute time frame?
Yes.
Okay.
Yes, for instance, something that I rely too much on, this concept about the smooth side of the market and the one that is wrecked, basically, right? You
Okay.
mentioned it a
Let
lot.
me ask you from
Right.
your current understanding about market maker models.
Yep.
When you're trying to take a market maker sell model, you're using the smooth level underneath the original consolidation as the draw on liquidity, right?
Well, I base my market makers model on the Asian range, basically. So what I do is, depending on if we're like in the sell side or the buy side model, I still use the Asian range to develop the trades during the New York session. So I use the 120 points that you mentioned in one of your videos like some years ago, and I base on that everything. Also, I use the smooth side of the market. I use the wrecked side of the market, who is like the one that is not in harmony, and also I use the fair value gap. So whenever we have the smooth side of the market that is clear liquidity to take it in the New York session, and it matches with a fair value gap behind those levels. I mean, before those levels were formed, uh, I understand with your concepts that we usually tend to not only take the liquidity from the smooth edges that were formed in the market, but because those smooth edges match with a fair value gap, they tend to go even further. So
Hmm.
so sometimes when we have this description of the market, and we don't go further, but we reverse. We either send the market lower or higher, even when the market or what I'm describing is telling that it should go further. So how do I do to maybe um, spot these moments in the market where it is not going to follow what algorithmically it should follow, uh, regarding what I just mentioned?
I have to apologize because I still I thought I was getting somewhere with
Yeah,
it,
no,
and that's not.
here's the thing, and I just want to add this for karma very quickly. Anything in the market, even
Yes.
if you're looking at a probability of it happening, you're trying to stack probabilities towards and confluences towards a model, right? And you're providing
Yes.
conditions, but it's making it difficult to answer the question. So trying to stack evidence towards the probability of a trade within the condition that it's in, it 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 has to have a little more holistic um it's just difficult to answer your question. So anyway,
Well, yes.
car-
Maybe I don't know the words to maybe describe perfectly what I want to. If someday I have the opportunity to show you the charts and explain you
yeah,
in
That's
bro.
a
I
detail,
mean,
perfect.
I would
Is
like
that what I
to
was
do
gonna
that.
say?
yeah,
Send me a post.
yes.
Okay, give me a
Okay.
chart and type
Hmm.
it out in your question. So that way I have a visual representation of what you're trying to
Excellent.
describe. And that way you
Yes.
can very clearly explain to me what is it you anticipate as a response from me. And if I
Yeah.
don't see it, keep spamming me and I'll
Yeah,
see
we'll
it.
we'll
Okay.
we'll make sure we'll
Okay.
try and
I
tag
will.
you in it, buddy. We'll try and Karma Trader. I mean, we'll try and remember you. I mean, ICT has a lot of folks to keep track of. So, guys, we
I
are
will.
Hey,
wrapping up. Just a few more folks. We have a few
hey, Kitt.
hands here.
Thank you for the time, for letting me speak and answering the questions.
You're welcome. I'm
Kitt,
sorry
can
I
I?
wasn't able to answer it for you here.
It's fine. Don't worry.
Hey, X is undefeated, brother. Sometimes that's just how it comes out. It's all good. I
Yes.
think anyway. And high five, Karma. Thanks for coming up. Much love. Appreciate you being here. So
Hey,
gonna keep it going, keep it flowing. We got a couple more moving through at 7:16. I like the time. Moving on.
Okay,
Gordo.
can I ask a quick question, my
Yes, sir.
brother? All right. I believe what Karma was talking about,
Okay.
it's
You're gonna
similar.
build on that. Okay.
Yeah, it's similar to the kind of question, what I started with earlier on the space. Michael, um, in a market maker buy model, which we are currently in from April of this year, we are in drive number 3. Is this is this we are drive number 3 heading to a SMR, right? So I believe that the question Karma wanted to know is this: are these quadrants a way for you to know if this is going to be a market maker sell model before we hit 2.5 standard deviation to create SMR, which would complete drive number 4 for a smart money reversal on this market maker bond model?
Are you referring to NASDAQ?
Yes, thank you.
Okay.
Yes.
You will be able to see legs of a smaller, not daily or weekly type of time frame, but like for instance, like an hourly or 4 hour. You can start seeing that type of structure, and the quadrants will aid you in that. But we're in a climate where it could just resume and go back to doing all-time highs and just perform the same way gold is, and just start going parabolic for, you know, who knows how long. I'm not confident that I could make the case or argument that you're going to be able to find that level of trust in it in the current climate. But when we're not trading like we're doing right now, and it's like a normal, regular, we're not trying to press for all-time highs or flirting with all-time highs after a complete wipeout, 2 Fridays ago. I believe also what he was also asking the previous caller. He's looking for a way to know beforehand these black swan events and how to avoid them. And I don't have an answer. I just know that we're in a climate like that. And that's why I've been warning everyone that be careful, don't over leverage, because something can happen and it can wreck you. Even me, if I over leverage, that's why I'm not leveraging large. So there's a limit to my ability as an analyst, trader, guru, teacher, whatever it is. And I have to submit to where I know I don't have the prowess. So I'm
In
submitting
market's
my,
always a potential, right,
yeah,
Michael? I mean, there's always
yeah.
a potential within the market, and you can only see what you can see. I mean, the willingness of the market to do whatever the market chooses to do, that's human consciousness. That's just what's happening. And every day as things are occurring, we will have to deal with those forces and those things that happen. So as traders, there is a potential. That's why we have a potential, and it could go up or down. And we as traders are trying to stack those probabilities in directionally putting ourselves on the right side of a trade. And these quadrants and what you're learning right now is really giving you a wireframe in which to really see premium and discount and the entire PD array matrix, the order block theory outlined in core content month 4. So folks who have not studied that need to go back to core content month 4 and really look at order block theory, which is really the PD array matrix, and really take today's advanced concepts and look at backstitching and daisy chaining this information together. Would you agree, Michael? I mean,
Yes.
so that's it for the newbies in a way that we're able to succinctly, I mean, as a community, talk about what, and having our mentor here providing the information and knowledge. You need to take all of what you're learning right now, and we're looking at aspects. There's different angles, there's different ways in which you can approach the information. And you take exactly what you're learning today, and then you're taking these different times and these different lectures and these different series that are very, very much applicable to and salient to the conversation that's being had today. It's the foundation. So for folks, again, uh, Michael, thank you. You're going over very advanced concepts that, as a charter student of yours, Pippi, so clearly pointed out, that there's an appreciation for this revelation of what you've always been doing. And for the newer trader who doesn't understand that, needs to build on the foundation that's already established. And that's for free, and that's on YouTube, and that costs you your time and your energy. That's it. Your time and your energy. And then trust and belief in what you're seeing. And that comes with repetition. Trust and belief is having the man here talking about and answering your questions, and then you seeing him perform in the market with these concepts. So again, thank you, Michael. I don't know if you have anything else to add with that, but
Yeah, as you were talking, I started thinking about like, I really want to press this on the listeners so that way we can really accept this as the more appropriate expectation with the things I'm teaching. All right, let's make the argument for the sake of the conversation. Let's say that Bitcoin, and I am not going to say that it subscribes to what I'm teaching. I don't know if it has the same level of degree of precision like you see me execute with the markets I do. But let's just say for the sake of discussion that Bitcoin follows it the same way. And before we traded it above 20,000 and it continued through it, you were expecting a market maker buy model to complete and a smart money reversal to form. You would have been smoked. Like you would have been completely obliterated. And you got to understand that where we're at right now, any string of events that would take place could easily propel this thing into a parabolic run to all-time highs, and vice versa. If they start dropping tactical nukes in Israel, okay, and trying to blame or frame it on Iran or Russia or some other Arab nation, our markets are going to fall like you've never seen before because that's just what they're going to do. And all the ICT wonder stuff isn't going to work. It's not going to matter. Quadrants ain't going to exist. It's just going to go, there it is, it's gone, vaporized. I would be very uncomfortable allowing the previous speaker that was talking about, do I think you were coming close to a smart money reversal because of, this, that, and the other thing. I am very, very cautious to even imply that that's something I would warm up to in any measure. I don't think you should think about it that way. And I'll say it this way. Look how meteoric of a rise Bitcoin had. Look at the meteoric rise that gold is under right now. Look at what coffee did. Look at cocoa did. These are markets where if you're trying to use this market maker buy model to project and predict, if you will, the smart money reversal because it's done 2 drives, 3 drives, whatever drives, whatever it is that you're anticipating, you got to be real careful not to expect too much from the things I'm sharing, because what it sounded like to me, and I might be wrong, but it was my interpretation of what was being presented as an opinion or a statement. It sounds as if that you're expecting that this concept in some way or capacity is going to be able to predict the top of the marketplace. And I've already stated that I don't know how to do that when we're in all-time highs. Like I don't know how to do that. I don't believe anybody does. And if I did, I sure as hell wouldn't be teaching it. I would never teach it. And if I was teaching it and it was effective all the time, they would want to come into my house and say, like, we want to see what you're doing, okay? Because that's just too much. But I really want to make the point, this stress, that there is absolutely no belief on my part that when markets are trading at all-time highs and there's just some parabolic runs, that there should be no focus at all on anticipating the smart money reversal. Smart money doesn't even know when it's going to reverse. They don't. So they have to wait for price to give you certain things. What they're doing is, and this is why I teach you to take partials every time it creates a swing high on any time frame. As the market keeps going higher, 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 every time there's a swing high formed, above the high that just gets pierced, they're distributing their longs. They're throwing them along like horseshoes, okay? You ever played a game horseshoes where everybody has a horseshoe in their hand and they toss it toward that post in the ground? Well, the previous swing high at all-time highs, smart money is trying to toss that horseshoe around the furthest part past that high. And they're distributing their long position, exiting out, getting there. They're not trying to sell. That's their primary function is they're already long. Their function is to distribute their long position every chance they can at the most premium price they can. There may be some accumulation of shorts, but in a market like gold, where we don't know how far it's going to go, just because I have a target of 5,000 doesn't mean it can't go higher. Just because I said something doesn't make it 100% valid and true, and then nothing else can happen. So there has to be some balance with the expectation of, as a student listening to me, I understand that some of the things I show and teach and call out, and it's phenomenal, it's great. But I'm still a man, I'm fallible, I can mess up. And I don't want you to lose sight of that, because these tools, when I was younger, made me feel like I was Superman. And I hadn't mastered myself yet. So having unrealistic expectations of being able to determine where the smart money reversal is when we're at all-time highs is outside my pay grade. I don't know how to do that. So hopefully I made that very clear.
If I may, thank you for letting for saying that, Michael. I appreciate it.
Sure.
What I was alluding to was the market maker buy model. We had 2 standard deviations from April, correct? And usually, what I look for on I look for a reversal on a market maker buy model. Usually, at 2 standard deviations or 2.5 standard deviations. So, when I'm mentioning, of course, there's on the daily, on the 4-hour, you're looking at the creation of 3 soldier pattern, which is what it looks like we're gonna go into to this week. So I understand the cautious part about it, and so there, I just wanted to go along with what Karma was talking about. Right, I'm not saying that I'm anticipating a 2.5 standard deviation this week, and but it's something that I have my mind to. Am I going to be taking a gambling trade on a long this week? Maybe not, right? But I am looking for 2.5 standard deviation to get tagged by the end of the year, which is
Okay,
by December.
do you mind if I just jump in 2 seconds?
Yeah, go
And I
ahead. Go
just
ahead.
want to just say this, Gordo. I think what Michael's trying to say is, like, when we're at all-time highs and the market has unlimited potential, So when we're identifying potential as traders, we're identifying where it can go, and we're looking to project or predict these unrealized ranges. But when we're when we're dealing with trending assets such as gold, such as the indices, which are really meant to essentially buy, borrow against, and then die, right? That's what investors do, right? They buy and it only goes up. And when you're in trending assets, that's what they do. And this is very much indices at all-time highs that are trending higher. So the unlimited potential of the market is difficult to call. And that's what I think Michael is saying. Just to
No,
reiterate
no,
that.
I understand. I understand. And of course, right now, anybody trying to go long is gambling.
I'll
I mean,
just
think
say
about
this
it.
though,
Think
dude.
about it.
Look how the
Think
bearish arrays are disrespected on gold continually.
no,
Like everything that
think
you would anticipate, it's been such a trending asset that it's saying fuck every single bearish array. And that's all. What can you do? Like, okay, we're at all-time highs, trending higher, trending higher, trending higher, and its potential is, as Michael's saying, limitless. Like, so it doesn't have.
yeah,
I mean, like, what do we do? Right?
yeah, no, and like I said, like you had the run from April all the way to now, so you had the chance to make your money, right? So right now we'll be gambling. Of course, we are looking at all-time highs. I wouldn't suggest anybody to go in there and yeah, I'm super long,
Well,
but
let me just add real quickly, because when we do talk about concepts, I trade oil, right? That is far more of a ranging asset, right? It's trending lower. It is trending also, and it is trending lower over time. But you're dealing with a ranging asset, dealing with certain algorithmic assets that consolidate or are in more fixed price ranges, will then behoove specific algorithmic models and or teachings that Michael is taught, and that will not apply to the all-time high condition with the specific index and commodity of gold and NQ, for example. So I just wanted to add that. I mean, we're dealing with different market conditions and different assets that do different things, and these concepts work on all of it.
no,
And
100%. I appreciate that, kid.
yeah,
100%.
so
Okay, I don't want to interrupt too much. I just been hearing you guys talking about quadrants so much, and I'm itching my skin to ask this. I know
I thought that was an ad. It sounded like it was an ad. I'm like, what the hell just happened here? You run an ad.
But I know ICT, you use consequent encroachment on fair value gaps, and you use quadrants on regular trading hour gaps or new week opening gaps. Now, my question is, in a fair value gap, specific levels like 0.25, 0.75, and 0.5 consequent encroachment, are there different probabilities of when price action trades into your fair value gap? Let's say the wick, I know you talk about consequent encroachment, but let's say the wick respects the upper quadrant. Let's say it respects the lower quadrant. Does that change the probability of the fair value gap depending on which quadrant it goes to?
Yes, and I talked a little bit about that in the past and even today. When you're bullish, a fair value gap, you want to see that really respect the upper quadrant when it's bullish. And you don't want to see it trade the consequent encroachment or get real close to it, but don't touch it and then pull the body up to the upper quadrant or above that. That's very, very telling for bullishness. I don't like to see fair value gaps when I'm bullish trade down below with a body below the consequent encroachment. Even if the body gets real close to consequent encroachment, but it's just below it, that to me is something. If I have a large position on, or I anticipated adding more there, I won't do it. I won't load on that fair value gap. I want to see if it's going to give me a little bit, give me more evidence that you want to go higher, because that's problematic. It's usually a warning sign that I'm going to either see a shift in market structure or it's going to go into time distortion. Then I have to wait and get more information. So yes, quadrants are helpful in terms of anticipating the measure of energy that it uses when it leaves the fair value gap, but it also is a precursor to tell you if you're close to some intermediate term high forming when you're bullish. Because if it starts to fill in those fair value gaps and it pulls back down 3/4 all the way full, what it's showing you is there's a lot of distribution going back down, 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 down. And it's building in this early morning that we're going to roll over here soon. and you need to be looking for it. Fair value gaps, by nature, when they're bullish, they should stay open. You want to see everything potentially see a gap stay there. A market that's strong leaves porous price action behind it. In its wake, when it starts going higher, you want to start seeing these little tiny inefficiencies where it just simply is not willing to give a deeper discount. It's just, this is all you get. You know, you're not going to get a discount on the hottest thing in the marketplace right now. And that's my interpretation of price action. That's how I read it. That's how I teach it. Does that answer your question, or you need some amplification?
No, that was straight sauce, because I feel like a lot of traders, when they're so tunnel visioned on getting their fill, they don't put into factor that if we're in low resistance liquidity run, those fair value gaps you want to see be left open. So they either miss their entry, or they if it goes down there, it's going to get disrespected. But what if there's you have a bullish fair value gap and there's a volume imbalance lower? I know you mark the fair value gap to the close instead of using the wicks, but would that also cause price action to go past consequent encroachment and then go to a specific level in the volume imbalance, then body up above it? Does that change anything?
It depends on where you're at in the unrealized price run. So if you're grading an unrealized price range and you're expecting it to have a significant run higher, if you're doing that in the lower half, I would just use it in terms of making sure my stop is below the volume imbalance, because it could spike down here just to entertain that and then go. But if that forms at, like, say, the consequent encroachment level or just above it, so it's like just above a premium level but still close to equilibrium, I would not be concerned about the volume imbalance, because I would expect that fair value gap stays open. I would demand that it stays open, because we're changing. Remember, as I taught today, we're going to change our expectation to, we don't want to see any give back at all, because we're at the low end to consequent encroachment. So it's kind of like a little bit of a knack. And that's the worst case scenario I could answer for, and you probably wasn't thinking about it, but I tossed it in there because that's one caveat that, based on what I've taught, it may be problematic for you. It may be like, oh, I don't know if there's a volume imbalance. Just simply make sure your stop is beyond the scope of that volume imbalance.
Wow. Yeah, no, I tend to overthink sometimes when there's a volume imbalance, and that just answered straight to my question. So, and then you're kind of leading to limit orders, right? For me, I think I don't use limit orders ever, because I feel like an edge in the market is that fair value gap. You see that respect, you see that body reaction, right? Now it could give me a little bit of a bigger stop loss, but no, you just answered everything I had. I appreciate it.
If you look at my executions, the majority of them, I'm entering on the higher end of all my PD arrays, whether it's the order block, I'm getting right in there. And you'll see, I might catch a little bit of heat if I'm buying the high of the bullish fair value gap or the upper quadrant. That's where I'm aiming. That's where I'm trying to put my opportunity to enter in there. That's my first toe in the water. Bang, I'm jumping in there. I want that fill. Now, if it goes a little bit deeper and touches consequent encroachment, and it does it real quick, but leaves the wick just right at consequent encroachment, and the bodies are laying just below the upper quadrant, I'll add on that, because it's telling me, yeah, I don't want to go below consequent encroachment. I don't really want to close down here. I don't even want to lay the body on that. That's when you'll see me adding and pyramiding in. But my first soiree of every entry is I'm trying to catch the high of the fair value gap or the upper quadrant. That's like my sweet spot. I don't care about anything else, because I know where my stop loss is going to go before the trade even goes down here. I know where I want to see it stop. But my primary focus is how it reacts off the high of the fair value gap, which makes the highest form or boundary of it, and then the upper quadrant of that fair value gap. I want to see the bodies, as they print inside that fair value gap, respect, like I was teaching today. When it's staying in the upper half and it's respecting that upper quadrant, man, that's like the easiest thing in the world. It's like literally like just shooting fish in a barrel. Like they can't escape it. You can't get away from it. You're going to get it. And it allows for a very, very tight stop loss, and it allows me the confidence to build the position large, build it up, build it up, build it up. Every time it gives me an opportunity to get in there and do it more in that fair value gap, bang, I'm adding more to it. And if it runs out of the fair value gap and comes back down, touches the top, I'll add to that too. So it's just a matter of knowing what I taught today, studying it in past, and then watching it live and tape reading, and you will get the confidence saying, I already know what you're going to do. I know how you're going to behave here because of where we're at in the range.
So I don't want to contradict you on this point, but when you're talking about multiple fair value gaps in an expansion, and you said in one of your videos that You want to wait for price to respect consequent encroachment to kind of identify which fair value gap you can use, but also couple other factors like if you're in low resistance liquidity run, it could be IO Fed or OTE. Factors change it, but if you're just taking it right at the top of that and sometimes you get a little bit of punching room there, how would you know without waiting for a body closure which fair value gap it's going to respect out of, let's say, 3 fair value gaps?
Now, let me ask you for clarity. So I'm not quite sure I understand how you framed the question. Give me a time frame for an example and kind of like flesh out what you're talking about. Like, for instance, say it's a 1 minute chart and you're anticipating a price run to buy side or sell side. What are we looking for?
So it's a 1 minute chart. We just took buy side. We broke structure to sell side. We expanded a lot lower, breaking structure on the intermediate time frame as well. And that expansion, that volatile expansion, left 3 open fair value gaps. Now, price action is slowing down, but it hasn't taken any sell side liquidity. And there's 3 fair value gaps that people are looking to enter on. And I know you said in the previous video that to identify which fair value gap you can take, you can see which one respects consequent encroachment. But to be able to identify which fair value gap it's going to, the one in the premium, equilibrium, or discount, how do you do that without waiting for a body closure?
Okay. So I will counsel you to go and look at model 2022. I covered multiple fair value gaps, and when they have 2 and you gave me 3, so I'll just say, okay, we're going to use the same thing here. What's the highest fair value gap? If the market structure really did, in fact, shift lower, and it really is going to go lower, and it wants to go lower, and you're going to be on side if you take a short, your stop loss has to be at least anchored to the potential of it running up to the highest fair value gap, but leaving it open so that way it affords you to see a breakaway gap. If it's just 2 fair value gaps, the same thing there. As I taught in Model 2022, it can shoot up into the upper, higher second fair value gap, but your stop has to be respecting that higher fair value gap. But I'm going to enter in the lower one, and if it punches up in that second higher one, I'll add and pyramid into that. I have no problem doing an addition under a little bit of water. If I know that the structure is there and it's just being tossed at a short-term premium before it dives lower, I'm accepting the fact if I get stopped out, that's a loss I'll eat. I don't have a fear of being wrong. If I get stopped out and it rolls over again and starts moving in my favor, then I'll just take a bearish order block because there's up close candles there right there. So what I'll just simply do is wait for it to tap the lowest opening of the 2 up close candles that used to run up into that and stop me out. I'll just get right back on, and there it is. I'll just do it with half the position, and I'll make all the money back and more.
Okay. Well, I mean, that makes sense. Basically, what you're saying is it depends on to narrative
Yes.
and what happened in the markets.
What measure of conviction do you have about? How much do you trust your analysis about whether or not it's really market structure shift, or are you just throwing darts? If you're not really strongly convicted about the idea that this really has posted everything that I would expect as a market structure shift and it's bearish, there's really a lot of other intermarket relationships that supports this idea of me seeing lower prices on this. And inversely, correlated things like the dollar index, it should be going the opposite direction. Seasonal tendencies being in line with what you expect. Just a whole slew of things that could be piled on top of it as a confluence or a confirmation, increasing the validity to what it is you expect. It should reduce all of the, I guess, immediate trepidation about taking it and just simply saying, okay, I just need a wider stop loss. If I see 3 fair value gaps or if I see 2 fair value gaps, I just simply say, okay, I have to trade with smaller size to afford this trade because I have to account for that higher fair value gap that could get traded up into as an institutional order flow entry drill and not complete closure, making it a breakaway gap.
Okay, so it's not about being right on the exact entry. It's about having the right stop loss placement coupled to the narrative.
Multiple fair value gaps makes the expression in algebra. The answer you're seeking is the stop loss placement, not the finest entry. When it's one single fair value gap, the focus is primarily the position entry, and the stop loss is irrelevant because it's easy. It's just above the fair value gap.
Beautiful. Thank you, ICT.
You're welcome.
That was question 4, boss. I counted them.
You can
So,
take one more just for extra
all
credit.
right, that's good. I just want to keep track for
Keeping everything honest.
Yes, yeah. Well, yes, sir. Absolutely. So we got one more question. One more. Who are we gonna go with? I mean, shot in the dark here.
How are you picking them? Like,
That's
what's your rhyme and reason for it?
well, there's not really a rhyme and reason, boss. Honestly, at this point, there's not really. I mean, my DMs are, people swearing at me, telling me to like pick me, pick me, pick me. Like, no, seriously, pick me. Well, we got Dodgy here. I'll bring him up. He'll be fun. So, Dodgy, you can jump in and be our last question. We've got Peter here too. He's fun. So, got Dom, got Neil. I mean, dude, I got folks here. We just got one more to wrap up. Pippy's got his hand up. Jump in here, Pippy. I mean, Pippy and then Ryan. Then that'll be it.
I'll make it quick. It's just reiterating what I asked before, right? About the PD arrays that you actually have exposed to the community, right? Do you know offhand average how many PD arrays you actually exposed to us?
I don't honestly. I didn't keep count of them specifically, but I know the ones that I did reveal. And if you simply count the ones I did, that will give you your number. I didn't sit down. Like, I haven't had that much of a concern about the number I'm releasing.
Now, just to piggyback on that, right? When we say like the PD array matrix, and we're looking at something like a liquidity void or a fair value gap, right? Would there be, I'm trying to think how I could formulate this, right? Because a fair value gap is not just a fair value gap. That's kind of vague, right? Because we have implied fair value gaps, inversions, and everything. Now, for every PD array that you have, is there like a similar type of iteration of every one? I don't understand if you understand what I mean, right? Like, because like for a fair value gap, there's multiple types of fair value gaps, right? So are there multiple type of breakers? Are there multiple type of liquidity voids?
Oh, like sub versions of the arrays that you currently have.
Correct.
Okay. Do me a favor. I'm going to answer you. But put your mic on.
Okay.
You got to mute. Yeah.
Yeah, because when I'm talking and when you talk, it was like this. I'm getting this distortion coming back.
Yeah, the echo's kind of bummer. X is undefeated.
Okay. All right. So I understand. I believe I understand your question. Is there different iterations of some PD arrays? Well, if you consider what I taught as a breaker, you have the breaker that has the high for a bearish breaker. You have a high, the low, and the higher high that's formed with the wicks. Okay. And then there's others where you can see a high, a low, and a higher body, but the wicks can be the same. Or the wicks can be reversed, where the wick on the first high is higher, but the body on the second high is higher than the first swing high. Did I say that clearly enough? Do you understand what I mean by that? Did I lose you?
Oh no, that makes complete sense. Hopefully, Pippy does it.
I follow. So there are
in mentorship. Are you a private mentorship student that went through behind the paywall?
Yes, he is. He is a mentor. There's just some echo vibe going on, so I'm just trying to answer for him. I think he's aware of that as well. But yes, he is a charter mentorship student of yours.
Then he knows that I taught the variant role of a breaker, where you can keep the wicks can be equal, or the first high on a bearish breaker, which you would expect to see a lower high form, and the right high is higher because it's like a turtle soup setup. It goes up the break and go lower. We use the bearish breaker as an entry once it goes to the low, once it swings below it. Well, in mentorship and private behind the paywall, I taught the students that the highs by wick basis alone can reverse their role. The first swing high can have a higher wick than the one to the right, but the bodies on the second one to the right needs to be higher than the bodies in the first swing high. That is an iteration of a breaker that if you're behind the paywall, if you were with me, you know I taught that. There is the role reversal or inversion breaker. So if you see a bearish breaker forming, either iteration of it I just mentioned here, if it trades above that, that down close candle at the low of that used to be bearish breaker now becomes a bullish order block.
I'm following. Thank you. Thank you very much.
But there is also different PD arrays that aren't necessarily imbalances, and they're not order block theories. It's something completely isolated away from both of those classifications. And those are the ones I'm debating on whether or not I'm going to release or not.
Yeah, release.
Release it, Michael. Release it.
Well, he's put it in the ether. It's already out there. Ladies and gentlemen, just kidding. You heard it here first.
Yeah.
I appreciate you. Thank you.
No problem.
I appreciate that.
Great. Where did Ryan was here? I don't know where he went. I mean, X is undefeated. I don't know what happened. Neil's here, and we are wrapping up. So Neil, do you want to jump in at all?
Hey, yeah, I appreciate you letting me come up, man. I literally just finished watching the live stream. I joined late, so
that's cool. With the
me.
idea, what are your thoughts and 2 cents on the live stream? There's Ryan. We'll get Dodgy can be our the finale for the combo today. After you though, Neil. So
fantastic. It's extremely eye-opening, and if you really paid attention, a lot of the breadcrumbs start turning into a whole loaf. And so so one question that I had though is if we have, so we're grading the wicks on a daily candle, and if we have a gap in between our wicks, so we don't say we're using 2 different days like we are this week or this past week for the wicks that we're grading, the zone in between those 2 wicks, would it be advantageous for us to grade that as well?
What do you mean by gap? I'm not sure.
So if we have if we're using the premium gap, we have that graded, and we have our discount gap graded, and in between those 2 graded wicks is an area of price that we don't have that would constitute the respective bodies, like the respective body between the 2 graded wicks. Would it be something for us to grade that area between our premium wick and our discount wick that we have graded on our chart?
So we're grading on grading, I think.
Yeah, so it's just breaking up the area between our premium wick and our discount wick into quadrants.
I don't believe that there's much to do about that I could speak of here.
Okay, fair enough. So and one other thing, when you started talking about order blocks, and when you highlighted the order blocks that were forming at the bottom of the discount wick, so of the range of that we're in right now. And you mentioned, the way I took it, you mentioned it's kind of like a handoff. So you have your first order block print, and then when the next one comes into it, it's kind of like handing off the responsibility of being the order block. Am I following you correctly on that?
Custodial control of prices. This is what you just explained right there. That's what it's called. Custodial control of price moving from one established range, which is the order block. Order in the title means it's going to order the process and instigate the displacement away from that opening price. And it's the block of price action that candlestick is encapsulating. So order block is that. When another subsequent order block trades down into the initial one, that becomes, if it's in close proximity, it's a propulsion block. But if it's elongated and spread out through a number of candles, then it's just simply another transition from the custodial control of what price is going to use to send it going higher from the first order block, then it trades down, touches it, then we were looking for it to respect it. It's got to respect it and keep it from going lower. Then it takes over the custodial ownership of holding price at bay. That first one still could be reclaimed, but when you see this custodial change in one order block to the next, then you have a frame of reference that now you have a whole structure where if we do have a retracement, it goes down to that first one, it can act as a reclaimed order block. But if it fails, you now have completely undermined the whole bullishness and it needs to go resume bullishness or expect it to consolidate or reverse.
Okay, so can we apply that to the time frame continuum? So if we're looking at a higher time frame and we've identified, say, like a hourly order block, and then price hasn't reached its higher time frame terminus, could we then look inside of that hourly order block at a smaller time frame to find where the custodial, that change of order originated, and then extend that, and then anticipate if it is at one of our quadrant levels of a wick we have graded, possibly that price, we would anticipate price if it redelivered there to, if we still have a higher time frame level that hasn't been hit, could we anticipate maybe a reaction off that level?
Do me a favor, give me the example. Tell me, are we bullish? Tell me what time frame we're looking at, hypothetically, and what we're trying to accomplish. Are we buying or are we shorting?
Okay, so we're looking at 1 hour time frame. So we'll just start with that.
Okay.
And on our 1 hour time frame, we have a bullish order block at a salient level for that day. So for that day, that hourly order block formed at a level that we would anticipate it forming, and then price expands higher, but hasn't, say we have like a daily level, like a daily high that price failed at, and starts returning back down into that hourly order block. If we were to go into a lower time frame, say like the 1 or 5 minute, and look into that hour that created that initial order block that sent price higher before it failed, and we find in that hourly order block the 1 minute or 5 minute order blocks, that custodial chain, and we extend that to the right, could we anticipate a reaction off of those levels when price returns to those, I guess you would say, a reclaimed order block, and it then have it hand over the custodial chain control to those new order blocks, say, that would form inside that previous hourly order blocks range, kind of like a daisy chain of order blocks, I guess you could say.
If only if it happens at a macro time or the first 30 minutes of an opening.
Okay, perfect.
Boom.
Thank you very much for your
You're
time.
welcome.
Okay, that was really good.
Yo, can you guys hear me?
Jump in here, Dodgy. You're gonna wrap it up for us. 5:50 or 7:57. I like the time.
Yeah, okay, I have 2 questions. Do you know why those equal lows didn't hit on Friday? Because I was gonna long there, but they never hit.
I know why.
Well, can you tell me or no?
RTH Friday.
I had a short there and it just never hit them.
Yeah, I saw a lot of folks out there promising it was going to deliver. I just
I
didn't want to twist
I
the
was
knife
short and
I let you guys see it.
Yeah, I ended up covering like a few points before, but I was still mad they didn't hit. My other question.
It hit it.
My other question was this.
It went down to 75 and stop.
Yeah. My other question was this. How is your son doing? Caleb? I'm curious.
Caleb is well.
Is he still trading, or did he like give up, or is he still motivated? Like
he's trying new things, like with some of the people here today. He's trying to do too many models. Doing one model ahead of really mastering one, and I guess it's a pursuit of trying to impress. Just like Cameron, try to impress trying to do more than what's necessary. Okay, if he just sticks to his model, he's okay. But when he tries to do other things, he gets upset and blames himself.
Yeah, I got you. Yeah, I'm just wondering. And then the last thing I saw you said you're coming to South Florida. If you and JCap ever go out, let me know. I'll go with you guys. But I don't want to invite myself. It's fine if you don't want to, but just you can
Dude,
email
you
me.
totally just invited yourself. What are you talking about?
Yeah. Yeah.
Hey, I'm just offering. I'm just offering. I'll
Oh
go out
yeah, if
there.
you're down in South Florida, boss, and you happen to be with
Me
like
and Kyle.
JCap, you already said you wanted to talk to, go ahead and call me up too.
Just let me know when you
Yo,
hit
me and
Colombia.
Kyle, we found this place called Greek Island. Best Greek food you'll ever eat.
Hey, good euros, hard to
So
beat.
good.
Just
Yeah, I don't know about that.
Just so you guys know, I know there's a lot of people. I've seen a lot of people sending me emails saying, "Please let me know where you guys are meeting up. Please let me know. Is this going to be a recorded
Oh my.
thing?" It's nothing like that, folks. It's nothing like that. He's just in an area where I'm going to be traversing through, and I just want to meet him and shake his hand, tell him I'm proud of him, and that's it. I'm not having a podcast. We're not recording anything. I don't want that to happen. I asked him to be discreet about if, and I'm not saying we are absolutely. I gave him a time window when I should be in the vicinity, and if it can happen, it's just a hi, how you doing? Nice to meet you personally, and just that's it. Maybe 5-10 minutes. That's it. I don't have the luxury of spending a whole lot of time because I'm going to be without my wife when I'm doing it, so I'm not going to leave her in the hotel we're at, sitting around waiting for me to finish gallivanting.
Well, Dodgy and I might just happen to be in the area because we might happen to like kidnap
Yo,
Jade
Kitt,
Cap,
if you're
and
ever there,
like we might happen to. I mean, I might happen to like just start sleeping on Jade
chill,
Cap's
chill,
couch,
chill, chill.
right? Like, I mean, I'm lucky. I mean, Jade Cap's wife actually likes me, so I'm lucky. I'm Uncle Kit to her. So, and I'm a cat
Hey, she
person,
likes me
so
too.
like, yeah. So we're good. I mean, maybe that'd be cool. But I mean,
I'm,
anyway.
I'm, I'm Laura's favorite friend's friend.
Yeah. Hey, that's something, bro. That's cool. That's awesome.
Yeah.
So, so
All right, I
listen,
gotta run. Thank
it's
you
yes,
guys.
we are going to run. It is 8:01. And I mean, Michael, thank you so much. I think this has been awesome. I think everybody will agree.
Yeah, have fun.
Yeah, and I mean, anytime you wanna do it, just happen to pop up around, never know. So anyway, again, thank you, Michael. It was definitely a lot of fun, lots of smiles. I hope everyone got some value, and you guys get to actually like get the human side of ICT, right? Like you guys don't need to have the God complex of freaking out that he's here. Like you get to see he's a real person, and
Yeah, I'm
that
just a man.
he's just cool, and he gets to hang out, and you get to capture that like again, like that Uncle Michael, and that's, I think, from a pressure standpoint, I'm sure that it's like almost a relief, right? Like I'm sure for you, because so many people put you on a pedestal, and you're just like, just treat me like a normal person, and give thanks to your creator, right? Like
Yeah,
to Jesus, right? So
yeah.
I mean, that's it.
They
So
get wrapped up in the showmanship. I get out here and I really put on a character to try to get things drummed up and attention, and it animates everybody, gets everybody excited. They tap into that energy, or they get offended by it, either
absolutely.
or. But that's not me. I mean, I obviously this is how I am in real life. This is it. Like there's nobody here, just us talking. The house
Yeah.
is empty with the puppies. That's it. And you don't hear me swearing and F word and all that stuff. That's just to get people talking. I want people talking. Because if they conversate, that means they're going to come and listen, and then they're going to get hooked once they see what I'm talking about.
Yes, yes. And once they see what works and how it works on the chart, it's very difficult to deny. So,
Yes.
brother, thank you so much for being here on behalf of the community. I mean, we love you. Thank you so much just for the access and for the opportunity. We look forward to future opportunities, future conversations, and more stories. Right? I mean, it's really nice to learn, and understand, like, you're a very good storyteller, and you can really explain things well with your narrative, within the market and within life. So thank you for being here on behalf of everybody. Thank you for sharing with us some energy this afternoon, and on behalf of everybody, we're very grateful for today, and so thank you. from on behalf of everybody. So high five, and we look forward to the next time that we can do something like this. So thank you.
No problem. No problem. My pleasure, and be safe.
Bye. Thank you for your time, guys.
Thank you, ICT.
Thank you,
Thank
ICT.
you. Thank you. Thank you.
Peace.